Okay, Mark, we are officially live. Thank you for joining me for another community call. Thank you to the community for submitting their questions and for joining us also. Last community call was awesome. We had 20 questions submitted. I did some summaries on them. I created some clips from them with all of the questions that were submitted, or a good number of the questions that were submitted. And it was really, really nice to see that the questions kept coming in. So that brings us here. We do have quite a few questions that have come in the last, couple of weeks or so, Mark. So we will jump into them. I know we want to limit it to maybe 45 minutes to an hour today. So we'll do our best to get to everyone's questions. Let's just jump in then, right?
Let's go.
Okay. First question for you. How do you differentiate yourselves from other AMMs, automated market maker protocols like Uniswap or Balancer?
Sure. So I think that there's a couple of different ways we can answer that. The first is that Carbon is the flagship AMM of Bancor, and it's not an AMM, right? And I think the more I work on things and start looking at financial theory, right? So not like technical analysis or anything like that, but what characterizes risk mitigation and how do you quantify it and that sort of thing. And there are ways that you can build that kind of intuition into a smart contract enabled exchange that you wouldn't be able to produce as easily in a conventional exchange. And so I think that that's one way that we delineate ourselves. To this day, for the last few years, there are things that you can do on Carbon that you can't do on either Uniswap or Balancer. And even with developments like Uniswap v4 and Balancer has new developments that have come out during that time and will come out in the future, still doesn't look like anything is on the horizon for either of those two projects that are encroaching on what Carbon does. So I'd say that the product is actually pretty well differentiated from those projects. But I think then also on the sort of project side of things and sort of the business logic for Bancor is that I still consider Bancor in the transition of becoming a B2B business. Whereas I don't think Uniswap and Balancer are doing that. They certainly seem to be much more focused on retail adoption and that sort of thing, which is fine. I'm not critical of that, but it's not the sort of business that I'm interested in. I'm much more interested in licensing and intellectual property enforcement and having a small collection of high value customers rather than an infinite collection of worthless customers. And so, yeah, I'd say that even the approach to the industry is black and white, right? We couldn't be further apart in terms of what it is we are actually doing as projects. So it's not just delineation at the protocol and product level; it's also delineation at the business level.
Mark, you were talking about the different features, even with Uni v4, that they're not really encroaching on what Carbon DeFi actually is. We're seeing new community members coming into the Telegram groups and things all the time, right? So this very well could come from a new community member. Maybe you can give them or just us an example or two of what those features are specifically that really set Carbon DeFi apart.
Okay, certainly. So Carbon DeFi is the first in its class of, let's say, a category of decentralized exchanges that employs what we coined asymmetric liquidity. And what this is referring to is that essentially the curves that it uses don't trade back and forth identically the way that they do on an AMM. And that's because these two technologies, and Bancor invented both of them, are meant to achieve different things. So really with an AMM, and remember the acronym stands for Automatic Market Maker, where you assume the when a market maker is doing their job well, that you always have some to a lot of liquidity close to the air quotes market price. And what that really means is that if someone wants to come in and buy a token and someone wants to come and sell the same token, that they don't necessarily have to find each other, and that they can sell into a marketplace that's going to offer both of those people roughly the same price at the same time. And that's really what an AMM is kind of designed to do. Now, the thing about market making is that it's not particularly profitable. And I think that, some of the market makers in cryptocurrency may have skewed, the view, certainly that participants in our industry have of how profitable market makers are, right? In crypto, the really big market makers are like, the rock stars, the investment bankers of cryptocurrency in terms of how successful those businesses are and how much revenue they generate. But typically, market making isn't considered to be a very glamorous business. And the automatic market maker is certainly subscribing to the kind of trading strategies that traditional market makers would have employed that also weren't, particularly profitable. And AMMs are even worse in a sense in terms of financial returns because of how restricting they are in, they don't have a huge collection of parameters that you can play with that would allow market making to be, all that much more attractive. And this comes back to things like risk mitigation and, order book theory and other things that I was speaking about earlier in our conversation. And so, yeah, what Carbon DeFi was supposed to be, and I think has achieved, is to carve out a new paradigm where instead of trying to appeal to this sense of how markets should operate or could operate or what the ideal marketplace looks like, instead you create a product that allows people to simply quote how they want to trade. And that kind of flies in the face of AMM theory because AMMs were designed with a specific view of the marketplace in mind, and it forces the people that buy the option that the AMM represents to trade that way. Whereas Carbon does the opposite. Carbon says, you tell me how you want to trade, and here are the parameters that you can use to express your will, and the protocol subscribes to you. And when we first launched Carbon, we were playing around with different idioms that we thought that the participants in the industry might resonate with. So things like Carbon DeFi is a buy low, sell high strategy. So if you have a specific view of how the market is going to evolve, and you have certain price targets in mind, and you find especially on crypto Twitter and Wall Street Bets and maybe not so much anymore, but certainly 3 years ago, things like 4chan, people do have specific price targets, like very well-defined price targets. And so, when people are saying, this market cycle, I'm going to, sell at this particular price no matter what, or I'm going to start taking profits as soon as I'm at this level, you can't really do any of that on an AMM. And the reason is that if your order is taken, meaning that if you happen to quote a certain price on a typical concentrated liquidity protocol, you have to be very quick to withdraw your liquidity once it's been transformed into the new mirror asset that you were hoping to get. And if you're not fast enough, if the market retraces, then your order is effectively reversed, which again is a consequence of AMM design favoring, or prioritizing market efficiency, not user agency. And so yeah, for Carbon DeFi, you would basically get to choose the prices that you trade at. And this means that you can quote things ahead of time. Now, because you can quote your asking and bidding prices separately. So, for example, I want to, buy Bitcoin if it retraces to $90,000, and I want to sell Bitcoin when it rallies back up to 100,000. You can actually just leave those requests on the protocol, and they will keep executing in perpetuity. So if the price of Bitcoin happens to keep fluctuating between 90,000 and 100,000, it will continuously, buy at 90,000 on your behalf and, sell at $100,000 on your behalf. And that's, I guess that's a poor choice of words. It doesn't really do anything on your behalf. You're simply advertising your position. And the way that the smart contracts are encoded requires the protocol to do that. So it's not doing anything on your behalf. You're still doing it, but by way of a smart contract signature. And that kind of trading behavior is very common, right? Like some people will call this a fading trading strategy in traditional finance and other things. And then on top of that, you can also use Carbon just to scale in or out of a position. So we may be nearing a market top, or at least some people would expect that the market top is nearby. A lot of people are starting to think about what prices are satisfactory for them for their exit. With Carbon, you don't have to necessarily choose a single price point, but you can adjust your exposure, meaning that if you wanted to scale out of, let's say, Bitcoin between 120 and 125,000, if you thought that that's where the top is going to be, then you can select that range. Whereas in a traditional order book style exchange, the only way for you to perform that kind of scaling strategy is to create many discrete limit orders across that range. Whereas on Carbon, that's automatic. And this is because, like AMMs, Carbon is a continuous order book, not a discrete one.
It's also really nice too. You're comparing it to traditional order books, right? And how you have to create all of these different limit orders. At least in that sense, you're able to create them ahead of time, right? You're able to kind of preset those. So you have a little bit more opportunity there than you do on traditional AMMs, where you're actually watching the charts and timing the market and like placing these trades as a taker as well. So you're placing multiple, not orders, but trades with that slippage, and then opening yourself to a sandwich attack, and you have to watch the charts and pay for these different trading fees each and every time. Whereas on Carbon DeFi, you're able to preset them, as the sort of limit order, like the discrete orders, but as one big order, preset, not have to time the market, and not have to pay all of those trading fees and do all of that, at the time that you actually want to buy or sell that token. Thank you. Go ahead.
I think it's important to recognize that there are two different categories of trader, right? Mm-hmm. And the marketplace requires both. There are people who take markets and there are people who make them. And whether or not, like, there are individuals that categorically belong to one of them, or that, move between them, right? Sometimes people will take a market, or sometimes people will choose to make it instead. Usually it's the more disciplined traders that make, even on conventional systems, right? So Binance also allows you to take other people's markets, but it also allows you to make. So if you want to place a limit order on Binance, you are a market maker on Binance, right? Maybe not a very important one, but a market maker nonetheless. And I think the people who who use limit orders generally don't use market orders, don't perform token swaps. And it's for the reasons that you said. Generally, takers are suckers, right? People who perform token swaps are the meat through the grinder. On every, like, that's not just DeFi, that's on every every exchange primitive, right? They're the sacrificial lambs to, you know, the financial world, whereas the makers generally can't be exploited. And so this isn't just a new paradigm in DeFi. That's an ancient, you know, financial wisdom, is that people who take markets are you know, usually the what we call naive order flow, and they're the ones being exploited. The same is true in DeFi.
Yeah. Thank you. We had, I'm going to kind of cut in line here a little bit because we had a question submitted while you were answering this one here. So I'm going to, they clarified, they corrected themselves. They meant centralized exchange, not a DEX like Coinbase. So let's just pretend that says SEX there. What do you think about a collaboration with a SEX like Coinbase to help them bring limit orders on chain?
I'd be very open to it.
Yeah.
I think, you know, yeah, of course, I'd be very open to that. Like I said, this is the business that I'm in, and so if they had a specific need, then we absolutely could address it. I can't remember the last time we spoke to Coinbase. You know, I've met with them, spoken with them a bunch of times over the last couple of years. In general, they seem to be very hands off when it comes to Base. You know, and or at least that's the position that they advertise. And I think, you know, that's a sensible one. If I was Coinbase, I would probably do the same, because, you know, all kinds of shady things can happen on chain. And, you know, when they launched that ecosystem, I think that they were cognizant of the fact that they probably would have held a little bit too much power when it comes to, you know, which projects are going to be successful and so on. And this is true on all layer twos, like all blockchains, really. But yeah, Coinbase was more, let's say, moderate in how they exercise that power, and so they wanted the base chain to be a more sort of meritocratic sort of exercise, and they were interested, as all blockchains are, in what they called like native developers, meaning projects that hadn't existed before, new startups that were going to be exclusive to Base. And when, you know, when their perspective on that decision changes, if it changes, I'm sure they'll pick up the phone.
Perfect. Thank you. And thank you to our community member for submitting their question. Guys, anybody, you know, any of the viewers, you can comment and we'll, you know, try to bring your questions in here also. Okay, Mark, let's see here. Bancor has stood out for its focus on interoperability. What are the next steps to expand compatibility with other blockchains? And what concrete benefits do you expect this to bring to users? So when I think of interoperability, what do you think of interoperability? We had this discussion once about composability, and I learned a lot from that discussion. So maybe before we get into this, do you see Bancor as standing out for its focus on interoperability?
Yeah, it's a vague term. Like I don't think I don't think it's well defined enough that I'm going to be able to provide a satisfactory answer, but I can try. Let's talk about, for example, with other blockchains. That's an easy place to start, because when, you know, when you're looking at protocol, specific protocol deployments on blockchains, there's a, you know, even if, like we are currently, you know, even if you insist on the blockchain being compatible with the Ethereum virtual machine, even then, that's a spectrum of compatibility. And we're pretty liberal when it comes to classifying something as EVM or not. But, you know, there's a whole bunch of infrastructure and other overheads that you need to navigate in order to make things work. So a good example is Coty blockchain, which is a privacy-centric garbled circuits-enabled blockchain that you can consider to be an alternative to zero-knowledge proofs, at least in the privacy narratives, but has the advantage that garbled circuits are a complete technology. Obviously, there's things you can continue advancing, but the fundamentals have already been established, and that blockchain is up and running in a privacy enabled way. Now, those privacy features of that blockchain require some level of erudition in how garbled circuits work, and constant conversation with the developers of that blockchain, because as with any blockchain that's coming out with new features, there's always going to be some compatibility risk, if I can classify it that way, where certain elements of some smart contracts might break, or the way that you interact with certain smart contracts might have to change, all kinds of things, the way you harvest data from the blockchain. So I would say we're pretty pragmatic when it comes to that, if we want to call that interoperability, in the sense that we preserve the core of the contracts, meaning we, once the contracts are audited, essentially the code base becomes frozen. But the supporting infrastructure that's built around them, especially things like the web app, are subject to change, and can be more flexible to deal with those kinds of things. Now, outside of the EVM sphere, things like the Rust blockchains, or the substrate blockchains, these I'm less excited about, just because it's a much smaller market. And that's not to say that these aren't successful blockchains, right? Solana is a Rust blockchain, and it's spectacularly successful. But I can't really think of too many other Rust-style blockchains. And once you've committed all of these development resources to the development of, or let's say the porting of the carbon contracts and other things into Rust, you then have to pay the auditing costs to make sure that that port is secure, and that the costs for anything that's not Solidity is prohibitively high. And that's not to say we can't afford it, we could, but it's still, you have to ask yourself if is the juice worth the squeeze? And so forcing compatibility into some of those other blockchain paradigms, I think, doesn't make a whole lot of business sense yet, but it might, right? Somewhere down the track. So yeah, open to these kinds of possibilities. But at the moment, I think that we have the luxury of being able to be patient, to wait to see, how many blockchains there are going to be in those programming paradigms before deciding to commit to them.
Right.
And in terms of interoperability between, again, this is where interoperability and sort of composability sort of becomes a bit difficult to distinguish. But in terms of how the carbon contracts can talk to other contracts and that sort of thing, we have a fully fledged SDK, and in two different programming languages, right? We have it in Python and in TypeScript. And so if there are other systems, within Carbon's sphere of influence that want to use the contracts, we've made it, I think, as easy as we can for people to integrate it and use it. And with respect to what the benefits are to users, so I did a lot of speaking about what business sense it makes and that sort of thing. But in terms of benefits to users, sure, interoperability sounds like a great thing, but it can also be clunky and inefficient, I think. In the early days of blockchain, so back in 2019, 2020, this idea of composability and interoperability and things were really big deals, and people were getting very excited about like DeFi Legos and these kinds of things. I would say today the whole industry and its users have definitely sort of become a lot more shy about those kinds of interactions. And I think it could be because of how much we realized that the attack surface area increases once protocols start talking to each other. So even when you have a system that is relatively contained, that only needs to talk to an oracle, the risks are already prohibitively high. Or when you've got, a system where the lending component is talking to its exchange component, again, right, the risks become extremely high. So this idea that all of blockchains are going to be permanently deploying protocols that have other protocols as an assumption, I think is naive. But I think where those assumptions started to deteriorate, the bot infrastructure on blockchains kind of picked up the slack. So rather than having as a mandate that protocols are aware of each other, instead the bot infrastructure kind of works as the conduit through which protocols chat to each other. And I think the Art Fastlane that we have at Bancor is a really good example of that, because it means that Carbon is connected via the bot infrastructure to all of the other DEXs that exist on the same chain. And this is massively advantageous for users, because it means that they get access to a much larger market, right? And this is one of the reasons why I always say that the fragmented liquidity criticism of blockchains is a lie, because really when you're interacting with these markets, as long as you're making them, then really the whole blockchain exists as one contiguous market that's delivered to you by the bot infrastructure, and that is a kind of interoperability with I think very real recognizable benefits to the people that know how to use it. So on that front, we're constantly improving the level of interconnectedness that Carbon DeFi has with other exchange infrastructure. So I think we just recently, on TAC, we've integrated Curve for the first time, because the Curve contracts and system is a very complicated and messy one. But we've completed that. We're always looking for new exchanges that are deploying. I think the next one is Velodrome on Celo is coming up. And so, the point is that this is always improving. And if we consider that a level of interoperability, then it's something that, it is constantly being improved.
Perfect. Mark, thank you. Binance just launched crypto as a service. Does Bancor have any similar plans?
What is crypto as a service?
Let's see. It's where institutions, I was actually just reading about it because I hadn't heard about it. Let's see. Crypto as a service, finance. Okay. Allows financial institutions and brokerages to launch crypto trading services with access to the industry's most liquid, where'd it go? The complete institutional grade white label infrastructure solution designed to build and launch crypto services for banks and brokerages. Yeah,
effectively, we already do that. Yeah, I mean, Carbon is a white label product. So,
and it is institutional grade.
It's institutional grade. We have institutions that have purchased licenses already. There are two that come to mind immediately. One is Aureus, which is a Swiss startup that's taking advantage of FINMA's tokenized securities legislation. And then another one is Dusk, which is a layer 3, which is going to have a specific deployment of Carbon. That's going to be using its exchange license that it has, and will also be dealing with securities. So it's we're already doing that. That is the business proposition that I think we have.
Okay, perfect. Let's move on here. Here we go. Do you see this market staying open and competitive, or consolidating under a few larger actors like ETH-Staking?
Do I see this market staying open and competitive, or consolidating under a few larger actors like ETH-Staking? Hard to say. I think the market always breathes in and out. So, it goes through periods of contraction. I think that over the last couple of years, the explosion that we've seen in the sheer number of different blockchains is probably unsustainable. And so I think as some of the weaker blockchains, and I hope I'm not going to, I'm going to try and choose a couple of examples that I don't think will bring offense to anybody. But things like, what was it called? Blast, right? Was a blockchain that was like very, very hyped up, and everyone was
There was
super
a
interested in it.
lot of hype around Blast at first.
Yeah.
Yeah.
But now, it's, June has withdrawn support. A lot of the bridges have withdrawn. No one's really doing anything now, right?
We
I
had a
think that,
licensee that was going to Blast,
yeah, correct.
right?
I think we'll see a lot more of that kind of thing, and maybe this will be the theme of like the oncoming bear market. Whether or not that's going to happen sooner or later, it remains to be seen. But that could be one of the themes where we've got this like graveyard of blockchains that launched in this leg of the industry cycle. And so as that happens, there will be consolidation. What that consolidation looks like, I have absolutely no idea. It could be that the investors, builders, communities that were associated with those projects decide to start different projects, in which case there may not be as much consolidation as I'm espousing. But I think what's more likely is that those people will either choose to invest in something else, like AI or whatever, and the builders might change careers, or they will join existing developer teams on projects that already exist. So I do think that there will be some level of consolidation, not just in the DEX space, but across the entire crypto industry. I think that the level of diversity that we've enjoyed up until now has been positive, and I would prefer it if it didn't have to, if it didn't have to wax and wane like I expect it's going to. But I
Right.
think just realistically, looking at which way the wind is blowing, so to speak, I do think there will be some level of consolidation, even within things like ETH staking. I'm not sure that all of the ETH staking services will survive or can survive, but we'll see. I don't have a
Right.
crystal ball, so
Yeah.
but my expectation is for consolidation, and then at the end of that consolidation phase, just like the moving back and forth of the markets every 4 years, then there'll be an explosion in diversity again, and who knows what that's going to be.
You mentioned AI just now as one of your examples. Our next question is actually whether or not you have any plans to, do anything in that field, in that.
No concrete plans yet. I still, you might categorize me as a AI skeptic. And that's not because I don't think AI is really cool or that it's useless or something. I use AI every day for all kinds of things. I'm just not sure that it's the earth-shattering, world-changing influence that a lot of people think that it is. I don't consider it all that impressive or important yet. Having said that, I do see immediate changes in the way that Web 2 and Web 3 businesses might design their products. And I've spoken about this. I think I might have even spoken about this on the last community call. I can't remember.
For bots?
But yeah, one of the things that occurred to me, not just for bots, but for like user preferences when they're presented with an interface. So,
Yes.
for example, one of the plugins that I have for my web browser is called Dark Reader, which, if people aren't familiar with the project, go and get it. It's available on Edge, on Firefox, and Chrome. Throw them $10 or something because it's such a terrific plugin. And what it does is it forces dark mode on every website, right? So, because I hate getting blinded when I have to go to someone's website for the first time and it's got like de facto white or bright colors or something, which is I'm very sensitive to white light, and so I prefer to have a darkly lit screen. And so when I was playing with that app and changing the color themes and things, I had this idea that why don't I just get like an AI script that uses the ChatGPT or Claude API and automatically changes the settings on my dark reader depending on like what kind of application I'm looking at. And that's like very doable. I haven't executed that yet, but I don't think it would be too difficult to do something like that. And then it occurred to me, you could actually probably do that not just with the colors of the interface that is being presented to you, but the entire interface, right? So rather than have the AI just change the colors for me, instead, I'm just going to keep a window open and have, the AI create for me the types of interfaces I like interacting with so that I never have to interact with the interface that, my bank creates for me or, that YouTube creates. Instead, I'll take all of that information and have a single interface that I like, and basically design my own website that's going to be sort of a filter for every website that I go to. I think that is probably going to come to fruition. Eventually, someone will offer that service where the AI learns, or you can teach it or suggest to it how you want things presented. And I think that could dramatically change what web development looks like, and especially what crypto and blockchain products look and feel like. And I think that could be pretty disrupting. And
You want to
I
start working on
don't.
it?
Well, I don't. It's something that I don't think would disrupt us terribly.
Mhm.
But yeah, I am thinking about these kinds of things. Like I like to talk about this, this idea because I think it's cool, and I think if someone doesn't do it, um, if I suggest it enough times, someone will pick it up. Um, but yeah, it's more than that. I do think that there are things that are going to change. I don't think it's going to be at like the protocol level, right? Which is kind of where we operate. Um, so yeah, in terms of like plans for AI, really it's mostly how to adapt to it because the interfaces and things are changing. But no, it's not something that I think is going to be integral to the product, at least at this stage.
I think there was a lot going on with AI. I mean, it definitely became a big thing, right? But then little bit by little, it was like everybody was going to be replaced, And then you started to see some things happen within some code. And I think we kind of took a little bit of a step back there for a minute on maybe rushing so hard, so fast into integrating AI into every aspect, right? Or relying so heavily on AI.
I think
Uh,
we're in
okay.
that bottoming. Yeah, we're in that. Um, there's a I think it's a named cycle, the Gartner hype cycle, I think it's called.
Mm,
It's very closely related to the Dunning-Kruger effect or whatever it's called. Um, but it's essentially that, when something new and unfamiliar shows up, um, people have this um, overinflated perspective of how important it is.
yeah.
So like the internet was a really great example of that. Obviously, the internet became super useful over time. But at the time, people were the most excited about the internet. It was pretty useless and it wasn't useful for a very long time. Another good example is like nanotechnology, right? So there was another bubble shortly after or not too shortly after the dot-com bubble, which was like every company wanted to put nano in their name, and people were making all kinds of nanotechnology stuff and like none of it exists anymore, right? The nanotechnology bubble is deep in our past, and the only thing that really came out of it was stuff that probably would have happened without that, which is better semiconductor processes, right? So sure, like I think the industry, the interest that industry received during that time probably did accelerate the advancement to the 10 nanometer and 9 nanometer processes, and now we're getting even smaller than that. But yeah, almost nothing else from that time came to fruition. You could even say the same thing for blockchains and crypto, right? There were 2019, 2020 was the hypiest, most exciting time for it. And people were being told all kinds of stuff and telling each other all kinds of stuff about how, NFTs of the picture of a diamond is going to be more valuable than the diamond itself. That, these plots of land that they bought in virtual space we're going to appreciate faster than real, than the actual housing market. All kinds of stuff that at the time, I guess people thought sounded reasonable, but didn't come to fruition. And I think we all kind of understand how that eventually went, right? The NFT scene has been dead for a very long time. I haven't really heard much about, metaverse real estate in the last couple of years. Whereas there was a time where I couldn't go 10 minutes without someone wanting to talk to me about it. And
I
now,
think I'm the Galapagos Islands in some metaverse.
yeah, and now we've got the AI thing,
Yeah.
to your point, and I think a lot of the big tech companies are making the same mistake. It's kind of a meme now that the Microsoft executive team started, like actual layoffs because they're expecting to be able to replace, human programmers with artificial intelligence tools. And their latest, Windows update rollout is a complete disaster. I don't
Is
think that
it?
these things are a coincidence.
Right.
And yeah, more of the same. Like Wendy's, I think in the United States was experimenting with completely AI-driven like drive-through assistants, and that didn't go very well. There's there's just I think a lot of reason to be deeply suspicious of just how disrupting or how quickly the AI thing is likely to be adopted.
Yeah.
Because at the end of the day, what have we really got? We've got the ability to generate pretty crappy looking pictures. Like sometimes the pictures are okay, but you know what I mean? You can always tell an AI generated image. And like short videos that really are prohibitively expensive
It's
to
not
produce.
terrible. AI
I mean,
has
it's
its,
not
I mean,
terrible.
but do I want it in our DeFi protocol? If the coding was done by an AI, would I feel as confident at this
Yeah,
point in time?
it's just not
Would
that
I?
useful. And like I use AI for coding stuff with some level of regularity for sure. Um, but I've caught myself wondering like if it's actually made things any more productive. It feels more productive when you're doing it, but
Yeah.
I'm not achieving any more than I was without it. And in
I
some
find
cases, I'm
myself
achieving a lot
questioning
less.
it a lot less.
Yeah.
Yeah. And then I question, I'm like, are you sure? Because I thought this. Oh, thank you. Yes, no, you're absolutely right, Jen. Something, something,
It's
something. And I'm like,
yeah,
okay,
exactly.
I'm not sure. I'm gonna step away from this for a minute and I'll come back to you, chat. Thank you.
I
Okay,
think it's
Mark,
a
go ahead.
it's a I think it's a lazier way to do things. It's not necessarily a faster way to do things. So
Yeah,
it
sometimes it
doesn't
does
it
not seem as efficient if I were just to
yeah,
do it on my own.
exactly.
Okay, we're going to move on. We have about 15 minutes left, so I want to be able to give our community members their fair share of time. Regarding the ARB fast lane, should we be actively encouraging more participants to run solvers for greater decentralization, or will solver growth happen naturally as arbitrage opportunities expand?
Yeah, I mean the solver network is there. There's no need to encourage anyone to do anything. In the beginning, when Carbon was fresh, that was a super high priority. As with all new like DEX infrastructure, and there may be a time again. Probably there will be a time again where we will want to put the RBot in a few more people's hands and get them, arbing between the orders on, you know, whatever our next implementation looks like and the rest of the ecosystem. But really now, you know, Carbon is doing just fine. You know, the arbot is also, you know, not just arbitraging between Carbon and other dexes, but now does those dexes, you know, irrespective of what's happening on Carbon. And this, you know, as our arbot became more general, so did other people's. So whereas Carbon was once ignored by those bots, now the people that run those bots have learned how to integrate Carbon, and so it's being executed well. So the, you know, on the chains where Carbon is operating, it's now sort of a part of the furniture, so to speak, and people are interacting with it the same way that they would, you know, any other well-established decentralized exchange. So I don't think that it's a super high priority.
Awesome. Thank you. Let's see here. When can we see more utility for BNT? I know that this is touchy. I took all of the questions that were submitted. I am addressing them. I'm acknowledging them. Whether or not we can answer them, that's a different story, right? So if there is a question that you're unable to answer, just let me know and we'll move on. And
No, it's okay.
that's one of those. Okay.
It's all right. I mean, I'll, you know, if things are super sensitive, I'll tell you. But no,
Yeah.
I don't decide what the utility of BNT is. You know, only the community can determine that. Obviously, you know, I have proposed things that have changed the, let's say the mechanics of BNT, as have you know, other people. I think that a lot of the time when someone says utility, they're referring to like one of two things. One is governance, and you know, BNT already has that, and the other one is some sort of rewards program, and that's basically it, right? The whole purpose of utility is for someone to try and get, you know, some sort of effective interest rate, right, for being able to do something with that token. And you know, that's difficult. The, you know, the original utility for BNT, and still, you know, the purpose of BNT, in terms of you know, how it is recognized internationally, is to serve as like a liquidity token that, you know, the Bancor network maintains. You know, several different liquidity pools with BNT as the common numeraire, and that gives the token utility. And so if you want utility for it, it makes sense to set up a liquidity pool using BNT as one of the assets. That is BNT's utility. That's what was in the white paper. That's what the company was set up under. Now, obviously, the industry didn't like that purpose, and they, you know, went another way, which is fine. But yeah, in terms of bringing some staking reward or something to BNT or whatever, I'm really tired of those kinds of things. You know, our project, as thousands of others have really, I think, discovered just how unsustainable that that kind of thing is, especially like we have, when there's a DAO involved, that can get a little trigger happy, right, with rewards. Be reminded that the Bancor DAO issued something like $250 million in, you know, in staking rewards as, you know, utility for BNT staking, between 2019 and 2021, and moving into 2022. And we're still sort of recovering from that.
Are we still recovering from that?
Well, I mean, we're doing pretty well, actually.
I think we're doing really well. I think the last I heard is we might have surpassed that well point, but
yeah. Well,
I won't.
No, that's okay. I mean, the point is that like we are still recovering, but yeah, at this stage, I think the project has managed to reverse something like 97, 96, 97% of the inflation, which is huge. And you know, just recently the engine pool was closed down, which was really nice to see. And yeah, I think that, you know, utility is, you know, in the eye of the beholder, I suppose. I don't think that the project becomes more compelling or that the token becomes more compelling just because there's a contract or something that allows you to lock it up for some gimmick. I'm much more interested in doing things that actually matter and are important.
Well, you look
And I
at
would
some
prefer
that
not to
have
optimize.
that utility, right? But then you also know how like they are absolutely inflationary. And so you look at kind of the entire picture here of what's involved with it, not just, what can I do with it to earn a little bit of something, right? Okay. When deployments on more popular high volume chains?
Yeah, I mean I'm in London at the moment. Um, there's a couple of conferences coming up. One's at Zebu Live, where Eyal, the one of the founding members of Bancor, will be speaking, and I have a panel there as well. And then I'm also hanging out for London Blockchain Conference. I can't remember if it's called London Blockchain Week or London Blockchain Conference, but I'm here for that as well. Now, the reason I attend conferences isn't because I'm going to the nightclubs and things like that, right? I'm not here as a part of the
You're not
regular.
raving.
Yeah, exactly. um, I'm here to talk to people, and drum up business for the project. Um, and that usually entails speaking to new blockchains.
No,
Now,
you say new blockchains, right? And I think that's
we're all
important here.
blockchains.
All blockchains, right? But I think also that you want to, community members want to see us deploying, Carbon DeFi and the Arc Fast Lane on these really high volume chains. And it makes sense, right? But new chains are really, when I like wrote that blog about arbitrage as infrastructure, right? Carbon DeFi, the combination of them two actually serving this like purpose, this foundational as a foundational piece of this new blockchain, right? You have these different dexes, and we know when Carbon DeFi was deployed how difficult it is to get arbitrageurs to come and arbitrage your dex, right? Never mind an entire blockchain with these different dexes. So the ARB Fastlane, yes, it serves this purpose within Carbon DeFi, but it serves a greater purpose for this blockchain, right? So as much as we all want to see us deploying on these more popular high volume chains, as they, have said, it is also almost a necessity for these new chains that are coming about. And then you kind of establish yourself. And as these new dexes come into this chain, you're integrating those and you're able to grow with that chain and really kind of test out that volume. It was like what you were saying on one of our discussions with, what's important for new blockchains or what's important for Bancor. It was like the new blockchain, as they progress, as they evolve, so does Bancor. So it serves a real foundational purpose, infrastructure piece, as an infrastructure piece for these newer blockchains as well. I don't know if I've really voiced that with the community like I should have. So I wanted to at least get that in there really quickly. I didn't mean to cut you off, though. You can keep going if you have more you wanted to add.
No, I think I can't remember what I was saying.
We were talking about new blockchains, how you're at London Blockchain Week, and it's new blockchains, but it's existing blockchains. It's all blockchains, right?
Yeah.
Yeah.
And if some of them are if we strike up a conversation with a popular high volume chain, then and it makes sense for us to be there, then we'll do it. And if it doesn't make sense, I won't.
Yeah. Okay. You mentioned Ale. This is one of our questions here. This was actually in our chat yesterday. So great to see Ale Herzog, Bancor co-founder, just announced as a speaker at an upcoming conference. Will Mark still be presenting at conferences, though? You did say that you will be on a panel. You are in London right now for London Blockchain Week and for Zebu. Is this something that will continue? You will be presenting in the future as well, right? Or you will be.
Of course, yeah. I will keep doing what I do. The Eyal and I think are different kinds of presenters. And Eyal's been busy, over the last few years with with other commitments. And we're fortunate now to be able to invite him back, and that he's interested in becoming involved again. And so, yeah, I think that it's terrific. I am trying to involve him in more of the like conference circuit, so we should expect to see more of him in the future of Augur as well. But I have no intention of stepping away from my like, let's say, an inherited role, right, as being somewhat of a public a public speaker, someone that appears at conferences and speaks on various topics. The stuff that I tend to present on, I think the things that I'm better suited to are the more technical, right? Whereas I think EL is much better suited to the sort of big picture community building, state of the world, relevance of Bancor in the industry, that sort of stuff. So I think that between us, we can actually cover a lot more conceptual ground than either one of us could alone. So I see it as a synergy. Like, we're not encroaching.
It's not a replacement. Well, and I will say, with organizing the events and the speaking positions and things like that, right? Like, I work with organizers and I'm meeting with them, and we've had to actually turn down invitations in the past because you were already committed to a conference. So it's really nice to have Eyal joining us again, considering his entire history with Bancor, right? Up on the stage, and if it's not together at a conference, then it can be one here, one there, and you guys both do your things, right? So conceptually, yes, but also physically, two different places as well. All right, let's go here. Even very volatile days, we are not making too many fees according to Dune. How are you planning to scale them up?
We just broke records, right? Something like 19,000 transactions in 14 hours on Say last week.
We broke two records. We broke one on the 10th, and then we broke that new record on the 12th. Yeah, right. And it was just shy of 20,000.
Yeah. So I think a lot of people misunderstand volatility. I was just, even people within the organization, right? Even people within Bancor misunderstand volatility. There's volatility that is important, and there's volatility that's like completely meaningless. And just because the prices are changing doesn't mean that there's an opportunity there. It really depends on how much there is of a market to interact with. And so with the flash crash, for example, you don't have to take my word for it. This was a major talking point across all of crypto Twitter for about 4.5 hours as it was happening. But as these flash crashes were occurring, the trading volume was also going down, right? So it's not like a huge number of people showed up and started selling stuff all of a sudden. The price just started moving, and no one was conducting any trades. So sometimes when the price is moving, if it's doing so with no volume, then that's not really volatility. I don't even know what to call that. And similarly, sometimes the price doesn't move very much, but because there's a huge and like deep market for it, sometimes the opportunities can be actually pretty good, or at least fairly consistent, right? You get to process a lot more transactions with smaller value. And then, of course, there's the really great stuff, which is when the market sort of woke up again after the crash had finished, and then you get huge price swings with huge volume, right? That's generally what you want is volume plus price movements. And so we
did see that. We saw that with TAC too. I mean, we didn't. I think we had across the board, but I announced the transactions with Say. But if I'm not mistaken, last week, we had our most profitable day on TAC. and it was approximately 3 times what it was previously. Like the working, right? Everything's working well. And I also think that the community, and I've really tried speaking with them about this. And like, this is called the bigger picture, right? This is why this all started. They have a tendency, and sometimes I'll look at one thing, right? But it's not in isolation, right? Like you look at Bancor, we say Bancor is the umbrella. We have these different products, you know. You look at Carbon DeFi on Cello, you might think one thing. You look at Carbon DeFi on Say, you might think another thing. But when you look at Carbon DeFi on Ethereum, on Say, on Cello, on Cody, on Tax, the Arc Fastlane on all of its deployments, and you take that bigger picture along with the fees that are being earned on, you know, V3 and V2.1, that's really the number that I want the community to start looking at, right? Not in isolation, because that's never what this was, or you guys wouldn't have, like, you wouldn't have chosen to take Bancor in the direction that you did, right? It's the expanding, and then it's the scaling along with that. So I just hope that the community starts looking at the bigger picture here, and all of the fees that the, you know, Bancor protocol, the project is, you know, generating at the moment, not just one of those.
Yeah, and that's not to say that I'm complacent about it. You know,
Not at
like
all. No.
I'm never gonna be satisfied. You know, someone's
Right.
like, are you happy about this? Like, no, I'll never be happy. But I'm not. You know, I'm far from disappointed, I think, is the way that I can probably best phrase it. So I'm constantly motivated to do better. And I think, you know, that there are some switches and dials that we have access to, and there are some that we don't. So things, you know, that are dependent on, you know, let's say retail users doing stuff. That's obviously something you have no control over. But with respect to the specific settings on some of the up fast lane infrastructure, there's something that we're constantly experimenting with and trying to work out. Because the recipe for success there is not, you know, is not very clear. And so sometimes that means we try something and it turns out to not be very successful. But, you know, I'm glad that we run the experiment. I'm, you know, a glutton for information. And so sometimes, you know, sometimes you need to return and run that experiment a second time because, you know, as you were running it, there was a flash crash, right? And now you don't really understand what the effect was and that kind of thing. But yeah, these things are constantly in flux. The needs, our needs, the market's needs, the dynamics across the whole industry are constantly changing. And we are learning to adapt to those.
Mark, this next question, I really don't think you're going to be able to answer. And I know because I wrote a blog about it, but I don't want to ignore our community member. How much revenue is licensing making? How would you like to answer that?
I can't. So, I'm happy to explain why I'm not going to answer it.
Mm-hmm.
It's really out of respect for our business partners. You know, like I could say, and you know, actually, in many cases, it's NDA'd, but not in all of them. But even then, it's just disrespectful, you know, to talk about it. It's not like Bancor is a publicly traded company or something. We don't have, you know, Form I-90s or whatever that we need to disclose this kind of thing for. And it's probably because of that we're able to do business with some people, because they wouldn't want, you know, to have that information broadcast. One of the things you have to appreciate about cryptocurrency and blockchains and the developers in it is that, you know, they do value their anonymity and privacy. And so, yeah, unless I'm obligated to talk about those things, and, you know, underscore obligated, I choose not to. And I think that would be true of anyone in my position, right? You know, it's the only reason you would ever talk about something that sensitive is because you are legally required to. And thankfully, I'm not, and so I don't.
Awesome. Okay, we got 2 more. You ready? If you have another minute, that okay? Another couple minutes?
Yeah, sure.
Okay. Why not put more money towards retail enterprise marketing?
Because I don't think it works. I
Kind
have
of crazy, even just me being involved in that process also. I thought that like we would have much higher, ROI on certain things, and you turn around, you're like, what? Like how
yeah. Let
you
me
you're convinced. You go into these convinced that this is going to be successful and this is so well worth it, and then you're just kind of like, wow. Okay. I
yeah.
was clearly wrong about this. Sorry. I didn't mean to cut you off. That was rude. I apologize. But like, I have been
That's
involved in this process for long enough to know, like, you really genuinely think these things are going to make a difference, right?
yeah.
I am not convinced that they really do at all. You're talking about bots, right? I think a lot of these numbers and I think a lot of these things that people see that make them think that these things are so successful is
Yeah.
botted.
Look, I know a lot of the, okay. How do I go about talking about this? I think to, let's say, the average crypto community member. This doesn't necessarily refer to our community members explicitly. It can be just anyone, who's got a normal job and a family or whatever. They've got a normal life, and then crypto is kind of their hobby, and they check in every once in a while, maybe every day or whatever. The world that they see and the world that I see, I think, look extremely different. Because their exposure to the industry is through things like Twitter and Reddit,
Cointelegraph.
maybe
Mhm.
Cointelegraph, and it must look so, I don't know, active. I don't know how else to put it, but a lot of this is faked. For the longest time, this whole what is it called, the KOL industry,
Mm.
um, has really been, like, between founders and between people like myself that are leading projects, is really just like this toxic, you know yeah, threat actually to the credibility of the of the blockchain industry in general. And that's not to say, like, I know people that call themselves KOLs, but that's not the kind of person I'm talking about. And I think we all know what I'm referring to. The people that you jump in your Telegram and say, look, I've got 400,000 followers on Twitter, give me $20 million worth of tokens, and I'll bump your price by 25% this time next week or something. Of course they don't have that power, right? They're looking to try and trick naive projects into handing over huge amounts of money, and that's just like the bottom rung, right? On top of that, there's this whole sort of pyramid of of like crypto marketing crap. People like Ben Armstrong, belong to that. This was the BitBoy crypto thing. Um, for maybe that's old news now and people don't recognize him or know who he was, but he was a big deal once upon a time. And you can kind of you know dig through some of the stuff that came out as he was being arrested and that sort of thing, about just how destructive an influence he was for some of the projects that he was working with, including the company that he owned. And there are many examples like this. Now there are a few, what I would say, like neutral players in the space, um, but there are very few. And most of like the crypto media is prohibitively expensive, ridiculously expensive. I think people would, jump out of their shoes if they realized what it costs to get, some of the coverage that they assume, I think, just happens organically or something. But then also how little the returns are. One of the things I might bring your attention to, just because it's very public, and this isn't me being critical or deliberately critical, but Polkadot is one of the highest spenders on marketing.
KOLs, I remember this. That number was outrageous, right? Like that went
Not just,
public. I don't remember how that went public, if it was just transparency.
yeah, exactly.
You
And
know,
that's why
but
I'm saying it, is that and that's not like, I have no interest in taking a shot at Polkadot, right?
not at
And I'm
all.
not.
Right.
It was just a media event that ended up all over crypto Twitter and YouTube and whatever, where people were discovering just how much money they were spending on marketing agencies and things like that. Not just KOLs, but stuff you would recognize, things like Masari and Cointelegraph and that. So if you want to know how much that stuff costs, that's now a matter of public record. You can go and find that. Even things like the blinking icon that they have on CoinGecko or CoinMarketCap or something, like that has a cost to it. And the reason why this was such big news is because it didn't seem to achieve anything.
Yeah.
And that's generally among professionals in the industry, crypto, like marketing in crypto, is kind of a joke.
I won't take it personally. Okay. So I'm joking. Okay. Last question. And I almost I don't feel bad asking it, but like something happens to Mark, God no. Is there anyone competent to take the lead? It's
Yes,
a really sweet question, actually. Like somebody thinks very highly of you. A lot of us think so highly of you that it's like, dear God, whatever, like what would happen if Mark wasn't here? Right? Like,
thank you.
So it's a very sweet question. I just like,
it is very sweet.
Asking it, like if something happens to you, no. But
it's very sweet, but I assure you that if I was hit by a bus, or if I was,
don't give examples. Don't make it. Don't like.
If for whatever reason I was unable to continue in this position, there are many people who are as qualified, maybe more qualified than I am to take up the reins and march on. I would have no reservations that Bancor would very quickly find someone equally competent or more competent when they needed to.
As devoted, you're pretty devoted to the cause here.
That one might be tricky.
Yeah. Okay. Well, that was our last question. Thank you so much. Anything that you want to share with the community at all? I know we spoke about how you guys are in London right now. Last we spoke about how you're working on some things. I'm sure we'll update the community once we have some updates for them. Okay, well, here's one more for you.
It's Justin's son in the line of succession. I mean,
and on that note,
what line of succession is Justin's son not in?
That's awesome. Okay, well, Mark, again, thank you so much. Thank you to the community members who were able to join us live. I know a lot of them can't. We are all over, so this is why we record it, and we'll make some clips and things. And I appreciate you. We all appreciate you. Thank you for taking the time.
Thank you.
Of course. And thank you to all the community members for their questions as well. Continue submitting them, and I'll continue to poke and prod at Mark and get him up here on a call with me. So awesome. Thank you, Mark. Enjoy London. Good luck. Okay. And we'll talk to you soon.